Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Well, hello. Welcome to the COB on the 1st of October. I'm Nadine Blaney. It is a pleasure to be here with you. And it was a bit of a fizzle today. We sort of knew that heading into the session, though, with futures pointing to a loss. We had a bit of a mixed picture being painted on Wall Street in the wake of commentary from the Fed Chair Jerome Powell. Firmly committing to interest rate cuts going forward. Of course, data dependent. But it certainly seems as if there are further rate cuts to come. And the S&P 500 did finish at a record high. That's not going to be the story for the local market. It's one of our key themes this morning that we've retreated from that record. After 5 straight days of gains, we did see the materials snap that winning streak with some of the big names down. BHP, Fortescue, Rio Tinto, although I must say that I had so many conversations today about the miners. Jason Tay from Vertium Asset Management comes to mind. He reckons it's still a buy for BHP, for Rio, for Fortescue. Also talking about the beta on offer from Mineral Resources. I won't give it all away, but you can find that online, ausbiz.com.au. And I just had a great chat with Casey McLeod from Fidelity International. So he gave me his thinking on some of those iron ore plays. Interestingly as well, he gave me a couple of stock picks outside of the miners in those more growth areas of the market. And they do take all the macro into consideration, but ultimately are bottom-up stock pickers. So a couple of interviews I'd really suggest you go and have a listen to if you have time this evening, tomorrow morning, whenever. Look, a lot of the conversation today as well about the RBA. We did see retail sales come in quite strong, up 0.7% in August. So, of course, they're talking about the good weather. Warmest August since 1910. Climate change, anyone? Anyhow, warmest August saw us going out and buying liquor, eating at cafes, gardening tools, outdoor furniture. And we're spending, it seems, some of our stage 3 tax cuts. And that is something the RBA has their eye on very closely. I spoke with Paul Bloxham from HSBC, who detailed what it may mean for the RBA. He firmly is of the view that rates will not be cut until, maybe even April, May next year. So that interview is up online as well for you to take a listen to. And jobs. So we've got jobs data coming up tonight in the United States. Well, we get the JOLTS job report, we get the weekly jobless claims on Thursday, and then that's followed up by non-farms on Friday. So a lot of this jobs data in the US, because that is where the focus is for the Federal Reserve. And that's likely where it will be in Australia once we get through this inflationary period, once we start to talk more seriously about interest rate cuts coming through. Okay, enough of that. Let me just run you through, if you're listening to this in podcast form, I try to remember to say the percentage terms, but we saw BHP down by 2.8%, Rio off by 3%, Fortescue a bit more than that at 3.25%. So the best performer out of the big miners was Mineral Resources, which was down just 0.6%. Okay, let's get to the banks. And again, selling coming through here. All of the big four plus Macquarie down by between 0.9%. And in the case of Macquarie, nearly 2%. And that was the worst performer out of those big banks. Healthcare, well, here's where the picture improves. Some buying in CSL, up by 1.3%. Cochlear, 3.7%. Ramsay, ProMedicus, but Sigma had a bit of news behind it, and that is why shares there are up by 24%. So what it's done is the ACCC is looking for submissions in terms of that Sigma Chemist Warehouse tie-up, the deal, the merger, I suppose. It's worth $700 million. And so Sigma has come out and said what they're willing to concede, particularly to keep franchisees happy and keep some of those competition concerns at bay. So I guess some of the concessions that it has made has helped relieve some of the consternation in the market, sending shares higher by about 24%. Qantas, what's that have to do with? Well, because Qatar has moved to buy 25% of Virgin from private equity from Bain Capital. And so that could potentially, if it passes the Foreign Investment Review Board and the Treasurer, Jim Chalmers, could increase competition in the Australian market. This has been a long-running story. Olam Agri was going to buy Namoi Cotton. I need Juliette here with me. This is when she's all across. Olam has upped its bid for the cotton producer on Monday, but said late in the session that would let its bid lapse next week. So it looks as if it has ceded to its rival, Louis Dreyfus, in that months-long battle. So Namoi Cotton, apologies, is up by about 11%. And REA, so the market is voting with its feet after it confirmed it would abandon its takeover attempt for Rightmove after the UK real estate site knocked back its fourth bid in a matter of weeks. So shares up off the back of that news, 4.4%. And yeah, we've still got breaking news coming through on Reuters right now on that Namoi Cotton. We've got another bidder statement coming through confirming an increase to an LDC offer price to 77 cents per Namoi share. Interesting. And also, we've got a little bit of news from Rio Tinto right now, saying that Green Lithium and Rio Tinto have taken the initial step to develop lithium supply chain commercial partnerships to strengthen the European battery metals value chain, I should say. I like to keep you up to date on what's going on as we, get through to that European and London session. I think also we need to keep in mind as investors the fact that we have Israel launching ground operations in Lebanon with limited raids that we've heard on Hezbollah. Okay, let's get to my special guest. Joining me now is Dylan Wu from Pepperstone. Dylan, welcome to the program. Thanks so much for joining us. Maybe you could just give us your thoughts on this Asian session today.
Yeah, thanks for having me again. So I think basically this Asian session is quite exciting, and my major focus is to China, is because basically China just entered its golden week from today till this Sunday, and it just gave a lot of stimulations and new policy measures last week, and I think basically the Chinese authorities are more urgent about controlling deflation and achieving reflation. So it would be quite interesting to, kind of give a preview of the market and what the market can potentially look like after the golden week break.
Yeah.
And yes, actually, in my view, a lot of the economic problems China is facing are basically, chain reactions from deflation. For example, deflation slowed the economic growth, leading to, high youth unemployment. And with the economy struggling, people are more inclined to save rather than spend. And also from a social welfare perspective, local government revenues and overall spending so far this year are way below budgeted levels, indicating some regions could be facing serious financial challenges. And right now, some local governments have already cut wages for civil servants and also even paused the basic social spending. And I think it's quite interesting to look at China, although it's currently a closed market.
Okay, yeah, so the market's closed. We did see a very strong reaction to the Chinese stimulus last week when it comes to commodity prices, iron ore in particular. Do you think that some parts of the market have become too excited about this stimulus too early because it still has not yet been implemented, nor have we seen the actual real life impact of it?
Yes, indeed. I think the new measure helped to some extent in breaking the vicious cycle of falling asset prices and weak sentiment. So we can see a strong boost in Hong Kong market in CN50 and CSI 300. But until we see more details about how these policies will be implemented, where I would say at least a clear roadmap for their rollout. I'm skeptical about how much they can really help the housing market and also the equity market, because overall people need more confidence to invest, to spend, instead of worrying about probably tomorrow they will get unemployed and sort of stuff. So yeah, I think until we have more policy details later on, I would have much more confidence about the sustainability of a equity growth.
Yeah, because it was, an absolute sugar hit. If you had to pick sectors that you would still favor in China, though, would you still be allocating to Chinese equities after this big lift that we've seen just in the past few days?
Yes, actually, I like in the short term, I'm still quite bullish on the Hong Kong equity market and also the more policy shifting sensitive like China mainland market because I think some growth point like new energy vehicle and also some Politburo meeting highlighted sectors like domestic spending or domestic consumption. As well as like other sectors are still like major focal point to focus in my perspective.
Okay. And so we have a bit of a break in news flow coming from China because of Golden Week. What other risk events should we be paying attention to in the future that will help us know that the ultimate outcome of this stimulus will be positive? China will hit its growth targets and there's a lot that's riding on it.
Yeah, actually, I think the scale and the execution, like the follow-up of the stimulus policies, are really important to me. And besides the NPC or National People's Congress meeting in March next year, I think the NPC Standing Committee meeting coming up in October could really give us some useful insights, like details on swap tools and re-lending programs. And also given how the local governments are financially stretched, we're also hoping to see some, central government roll out a supplementary budget to boost the consumer trade-in program, stimulate like domestic spending, and also tackle some local debt issues. And I think on top of that, we can't really ignore the risks tied to the US elections as well, because the result could really bring a lot of uncertainty for China. For example, like trade tariffs, investment restrictions, and also supply chain de-risking, etc.
All right. Look, Dylan, thank you so much for giving us your views on the China stimulus, which has obviously been driving markets to a large extent over the past week. Really appreciate your time.
Thank you.
Take care. Dylan Wu there joining us from Pepperstone. Let's get back to, though, some of, the corporate news today, and that was Sigma Healthcare. It was the stock of the day. Joshua Barker from RiverX and Sean Hickman from Market Matters weighed in.
More inclined to sort of trim into this news announcement. Look, it's done really well. It's not necessarily a done deal yet. So I think, it did get sold off on its report just a week ago. It's also ex-dividend today. So you're getting the dividend, you're getting this announcement out of nowhere, which is not, entirely confirming that it's going to go through. So I'd definitely look to trim on today's, great rally.
At the end of the day, I definitely wouldn't be chasing at these levels. I could call it a hold to a trim. I think it will go ahead, but I'm with the crowd there. I'm with the consensus. And they're talking about not sharing the data for 3 years. Well, 3 years will fly by when they're combining a company and getting all the synergies in place. I think it's a good deal. The stock is going to benefit, but at these levels after this huge rally, trim or hold would be where I'd be coming from.
So not a ringing endorsement of Sigma, but there you go. If you'd like to listen to the extended version of their comments on Sigma, you can do so via the website. Just go to the series link to Stock of the Day. Let's get to some of those market leaders, and guess what? Sigma's on there. Deep Yellow as well, one of the worst performers yesterday to one of the best performers today. And that was up by 7%, pretty much. REA up by 4.4%, Boss Energy and Cochlear. Cochlear put on 3.7%. The healthcare sector was one of the best performers, as I mentioned earlier. Laggards, though, Star off by 9.8%. So it's resurgence yesterday, short-lived. And we had a Strike Energy, its price target cut 9% in the wake of its earnings to 25 cents per share by Goldman Sachs today. Webjet Group and Sayona Mining is also on the list. In the small cap space, there's Momoy Cotton up by 11%. Appin, one of those companies that is on here every once in a while, and it tends to be when we've got a risk on sentiment toward the tech names. Tech names did perform overnight in New York. It's up by close to 10%. Flipping the page to some of the laggards, and we've got just a bit of a motley crew of energy and minerals. Red Hawk Mining down by 12%. 40 Medical, though, on the list, down by about 11%. And I'm just seeing if there's any news. 40 Medical down by 11%. Did put out an investor presentation with an update on Philips, so clearly something in there not to be loved. So tonight, what's on? That's what I said, those JOLTS job openings. That data is really important, gives an idea as to the strength or lack thereof in the jobs market. Are people willing to quit their jobs to find another? Well, when they're getting hard to come by, probably not. Also, the US ISM manufacturing PMI will be released. And okay, so we don't hear from the big kahuna himself, Jay Powell, but we do hear from a whole bunch of other Fed speakers. We've got Bostic, Barkin, Collins also speaking tonight. So yeah, do they think, I guess the question is, how big, how many cuts to come from here? What's the neutral rate? Tomorrow here locally, Chinese markets remain on a public holiday. Not any big news here, as you can tell when you see the Japanese monetary base on the screen. We will be watching the Aussie dollar with much interest. Had climbed to multi-month highs today, or pretty close to it. Okay, so where'd we end for the S&P? ASX 200, we were off by about 0.8%. Let me get it up. Sorry, my computer screen just died on me. Down by 0.7%, 8,208. Looking to E-minis at about 20 past 4 here in Sydney, still coming under a bit of pressure. Bitcoin, though, is mildly higher. Oil prices have held pretty steady, as again, we keep a wary eye on the Middle East, but rising supply helping to offset any of the real uplift that you may see or could sometimes anticipate seeing as we see an outbreak of fighting in the Middle East. So we'll be keeping a wary eye on what's going on in Lebanon. Asian stocks drifting, but the US dollar firming. As we continue to ponder what's happening with rates right around the world. It was good to spend a lot of the day with you. If you've missed anything, you can catch up online, ausbiz.com.au. I mentioned a few interviews you might want to check out, but there are many, many more. And don't forget, the investment committee goes live tonight. Stay with us.